Okay, everyone, as promised, I'm going to do a video on silver. I'm going to be looking solely at the charts and then looking at the macro within the charts to help confirm that. If you actually want a fundamental macro perspective, I would invite you to go and watch this video by Tung, because he did a deep dive for my students at Mastering the Markets around why he is bullish on it through the macro. Me personally, the charts you'll find will align with what he's saying as well. And what I'm going to do is show you that today. But before we even dive into silver, you first have to unpack gold, okay? Because silver performs with gold, okay? It's like the little brother. So looking at gold, you can see here, this is the gold against the S&P 500. So precious metals against equities. When we're down at this level, precious metals are historically cheap. When we're up this level, precious metals are historically expensive. When we're down this level, equities are historically expensive. When we're up this way, equities are historically cheap. So now let's look back on the dates of these ones here. Where we are now, okay, back here is 2000. What happened in 2000? Biggest equity bubble of our lifetime, the tech bubble. We crashed. Okay, here. So then equities did nothing for over a decade. Here, during this period, we were in the 70s high inflation period. Last time, equities did nothing for over a decade. And here, right before the Great Depression drop, when equities did nothing for over a decade. So history suggests that whenever we're down here, equities do not perform very well for the coming decade. Whereas something like precious metals actually does. If you look back on history and look at when gold really soared, it was throughout those 70s up to the 80s. 80 it topped, never to be seen again, until the tech bubble. And again, the tech bubble dropped. And then if you look at the tech bubble, the NASDAQ dropped, I think it was 80%. Gold soared from that point and went absolutely crazy up until the GFC, which is when it toppled over again. So since the GFC, gold's been a pretty bad investment. It's been going sideways. Okay. However, if this starts to come up, and what I'm looking for in this one is if we get change of structure of there, that'll be an early sign. But really, I'm looking after this one here. Okay, because you can see selling, still buying lower, selling equal. However, what I do also have is bullish divergence. Okay, so we are weakening the trend. So all I'm looking for now is the actual confirmation that the trend has changed, and that's when we move from risk on to risk off on the larger macro scale. So if we can get above here, it's on. So it's not going to happen anytime soon, but somewhere between now and 2026, I would definitely be really, really careful. So that is looking there. If you want to deep dive on that, I did a massive video on gold over a year ago here, Will Gold Shine, and it'll at the deep dive on all the charts I looked at to know that gold was turning bullish back then. Okay, so that was when I put 30% of my portfolio in gold. We're now over a year later, gold has performed really well. A lot of those miners I was in have more than doubled, some have tripled. I didn't have a single silver miner in my portfolio until March this year. Okay, because how silver works is that it is kind of like the altcoins to Bitcoin. Bitcoin will run first, and then eventually when it gets a bit expensive, money then starts to flow into then the into the altcoins. Same thing happens with gold and silver. So what you need to look at there is your gold to silver ratio. Okay, and a similar kind of thing that you have here is that whenever we're up above here, okay, here, then that is when silver is cheap compared to gold. And whenever we're down here, that is when silver is expensive compared to gold. So right now you can see that we're up in the silver is cheap compared to gold historically. What I'm looking for confirmation is when we break below here, because then we have a change of structure. Lower low, lower high, lower low. That is where we would change structure and we would be in a downtrend again. You can notice here that the floor ratio here is around that 15, 16. That's because the silver to gold ratio in the earth crust is actually 17 to 1. So a lot of the silver bugs will believe that's where it actually should be because that's what the ratio is in the earth crust, but it's not. you'll find that often it actually finds that's where a bottom is. Okay, so going off what's in the earth crust right now, we're up at 87 when there's only 17 to 1. Right now, they're saying that there's an 84 to 1 ratio. Way, way undervalued compared to what is actually in the earth crust. Okay, so there's one chart telling you that silver is cheap compared to gold, and why? Okay, so you can see here, many investors believe silver, the ratio should be 16:1 primarily because there's 16 times more silver in the earth's crust than gold. Okay, sorry, I was wrong. Oh, here we go, has been narrowed to 17. So, yeah, around that 16, 17 is where it should sit. So you can see that's where it should get down to because that's what's actually in the earth. But as you can see right now, they're pricing it at much higher, which is wrong. Okay. Okay, let's actually look at silver. So when looking at silver, what you've got to now look at is always look back on past history. And what you can see here is we topped here in 1980, which as we saw from that other chart was when precious metals were very expensive. We topped out again there in 2011, which is again, once we got that when they were undervalued in the GFC, right before the GFC turnover. And now we're down here. So we're down here at $28, and in 1980, we're up at $48. So tell me another asset class in history that is half the price of back in 1980. It's gone absolutely nowhere. I'm going to show you why that's so important right now. I'm going to change this to the log. And I'm going to show you what happened. How markets work is they all run in cycles. Okay, so you can see here from, this is the bottom of the Great Depression. Silver went on an absolutely massive tear all the way up to 1980. So it was down here at 27 cents and ended at $48. So you had a 200x. Okay, nothing goes up in a straight line. There are always pauses in the markets where they need to cool off and chill. As I've explained to you, how the markets work in all markets is that they zig and they zag. Okay, so you zig and you zag, you zig and you zag. And that zag will be somewhere between 1/3 and 2/3, 80% of the time. Okay, so all I now do is get my fib retracement, go from the bottom here and take it up to the top. And you can see that silver should have bottomed anywhere in this area here. That was your 1/3, 2/3 retracement. It perfectly bounced off the fib 500 at $3.64 there. Then from there, we had a higher high, higher low. We changed market structure back out of a box. That was at $6.70, the point where we had a trend reversal. Okay, so we've had our zig, we've had our zag. We are now just going into the next zig. Okay, so this correction here was correcting this data from 1930 to 1980. That's a 50-year bull run that then had a 1980 to 1992, a 12-year correction. We've now just had this one come up, and now you've had a correction here. I'm going to wipe this and show you where this correction now sits. Okay, so we had zig, zag, and then from this point here, we've zigged without a zag. This is your zag. Now let's zoom in. Look at what we've done. Look at that. We had another zag correction down to the fib 302.618 zone. What did it bounce off? Exactly the fib 500, exactly like on the bigger one here. Zig, zag complete, back to get a change of structure. Remember how I said once we get out of the red zone, what have we done? We've come out, come back, tested it as support, old resistance as support. If you look what's happening right now, this is the 3 monthly candle, which closes in 2 weeks' time. We're possibly about to get a change of structure. If this candle closes above $26 on the 3 monthly, you have an official change of structure for the first time since we topped out up here in 2011. Okay, first time change in structure after our bounce out of here. So then that's looking at the 3 monthly. Let's dive in a little bit more again. 1 monthly. Okay, let's unpack the moves that have happened here. So remember the market zigs and zags here. Zig, zag. Let's look at what it did from there up to here. Again, it came down to your fib 302.618, well, fib 302.618 zone, where it's supposed to come down to. Zig, zag. So we've bottomed here, come out, tested at a support, and going again. Okay, now let's dive in again even further. Let's go into the weekly. So now from here, we know that bottomed, change in structure back out. Then you can see what we've got here are our phases. Accumulation phase, public, excess phase. After we get that, what do we get? We get a 1/3, 2/3 correction. We get our fib retracement, bring it up to here. Where have we come down to? We've come down to our fib 302.618. Again, zig, zag. We've come out, tested this 302 support. Okay, so that was the bottom. Now let's analyze this part here. Let's go down to the daily. Okay, so from here, zig, zag. Let's do our fib retracement from here to here. What have we come down to? We've come down to our just past our fib 302.618 zone, because it can go 2/3, which is a little bit lower. Come down, and now we've bounced off. So this is why I bought in March, because I knew that we had just finished our final correction before we were about to pop out. Okay, this is why I bought in March. What followed? Okay, we're breaking out. And now we're potentially breaking out and closing above on, let's look at the big picture. So, sorry, 6 monthly, which will close in 2 weeks' time. Okay, so if we close above, again, that $26, the 6 monthly will close above, and the 3 monthly will close above resistance. Okay, people think we're at resistance right now because we're at the daily resistance. We're not. And I did this, explain the same thing to you in uranium. You got to look at the big picture. Unless we all of a sudden reject and then close in the next 2 weeks below that $26, then yes, we have rejected that resistance. So we need to hold above this resistance that's flipped into support here in the next coming weeks. If we do, extremely bullish on the long-term potential. However, if we fall back within, it still hasn't closed above. So in 2 weeks' time, we will know what's going on there. Okay, so that's a bit of a deep dive on silver, and you can see how it's moved from the Great Depression now right into the time, and how I was able to get my great entry point here in March, just a couple of months ago. Why I was yelling from the rooftops, opportunity of a lifetime is on your doorstep right now. Everybody else was looking at crypto. What's crypto done since then? Done nothing but go down, when silver has absolutely smashed up, and a lot of those miners are up 60, 70, 80% during that period. Okay, you got to sketch where the puck is going, not where it's been. Don't chase yesterday's gains, chase tomorrow's gains. Where's the money going to flow into? Money never leaves a market. It just rotates from overvalued to undervalued. And I showed you that just in the very first chart I showed you. Precious metals against equities. When equities are expensive, it flows into precious metals. When precious metals are expensive, it flows into equities. Back and forth, back and forth, back and forth. Okay, so you've just got to do that same thing and find what's undervalued and what's going next. Someone like Tung, he is a macro investor, and he bought silver, loaded up his bags in 2015. Where was that? Here. He got the bottom. He got the exact bottom. I don't buy the bottom, because if you look 2015, where are we now? Nearly 10 years later, your money has gone from $14 to $26. It's doubled in 10 years. That's not a good enough return for me. What I do is I don't buy in the accumulation zone. You can see this is the accumulation zone. Okay, come down sideways, final spring before it's shooting out. I buy at the beginning of the public participation phase, when it breaks out of the accumulation. So I don't buy the bottom, I buy here when it moves out of the accumulation into the trend in phase. A good example of that is looking at something like NASDAQ. So if you go to the NASDAQ, let's get off the log now. Okay, I don't buy the bottom of the NASDAQ, because again, if you buy there in 02, you're not really making money until here. That's 8-10 years later. I'm not waiting 10 years to get just double. You buy on the first breakout, okay, when it's trending at the beginning of the public, and then you get the move. You get the trending move instead of the accumulation move. You don't have to buy during accumulation because you're not a whale that has trillions or billions of dollars. You just have your little amount that you buy, and you want to put that stuff in trending stuff, not in bottoms where it can base for a long, long, long time. Okay, really important you understand that you got to buy the beginning of the public participation, not accumulation. You don't actually want the very bottom. Okay, then the ones I posted about were SIL, so Silver, Global Silver Miners ETF. Okay, you can see here, again, look at the date here, 016. We haven't been down this low, like it's been down here 18, 15, 13, like 10, like they're near GFC levels. They're all the way down here, back at this level. Right now, what we've put in is a double bottom reversal here. Okay, that's a reversal pattern. And while we're above here, what we've actually done is break out of the accumulation zone. Okay, so downtrend into accumulation, just broken above the uptrend. So silver has just broken out of a long-term downtrend on bullish divergence. Just broken out of an accumulation that it's been in since 2022. So for 2 years, it's been accumulated here. Now it's just broken out. Again, where do you want to buy? Beginning of the public participation once you break out of the accumulation zone. Let's look at SILJ, which are your junior miners. Okay, Trust Junior Silver Miners ETF. What you can see here, same thing. Down, down, bullish divergence. It has been trending down this whole period. You can see very under 2013. It was back at 2013 level, so it had done nothing for 10 years. That's what you want. You want stuff that hasn't done something for a long time because money rotates. You don't want to be at something that's already at the top, that's already done the race. Skate to where the puck is going. Okay, it's broken its downtrend. All of a sudden, if we look at this, my highlighter, we topped here, sell in lower, 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 buy 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 in equal. We haven't even pivoted yet, but if we do, it's going to be higher. Why are they selling higher all of a sudden? Then I want to see them buying higher, then go through, and we have officially changed. But the fact that we've even done that is a very good first sign. The fact that why they're selling higher all of a sudden, that's caught my attention. Next, what I want to do is look at SILJ against SIL, because this will start to show me risk on within the sector as well. Because if the junior miners are outperforming the other miners, it's showing that money is flowing into the riskier side of it. As you can see here at the moment, resistance becoming support. I want to see this bounce up here, and then we are breaking out of here as well. Again, if you look at all it's done, is it's just done a retracement from here into our 1/3, 2/3 retracement. Okay, so at the moment, zig, zag, I want to see it continue. If it gets above there, the trend continues. And we have risk on silver miners, which is showing that it's in a bullish market. Okay, next what we want to do is look at SIL against SILVER. That is your silver miners against silver. Because again, if silver is going into a bull market, the miners will outperform the asset. If you look where we were, that's the COVID bottom. That's the 2015 bottom when gold and silver bottomed. When I said Tung bought the bottom of silver, the silver miners were historically cheap compared to its asset class back here at 2015. That's where they are now on bullish divergence. Okay, so now all I'm looking for is for it to get above here, old support become resistance. We're getting above. I want to see it then pivot, go like that, and we are good. They'd be selling higher, buying higher, we've gone. But just looking at the data, historically cheap COVID bottom, 2015 bottom on gold and silver, and we're back there again for the first time. Hence why I bought in March. Okay, so another thing showing why it is bottomed as well. Now let's look at the silver junior miners against silver. Okay, same thing, historically cheap. Same thing, double bottoming, get above that neckline, bullish divergence. looking very nice as well. Just need to see the trend continue up. So still a little bit early, but if we do get out, that there's a reversal pattern if it plays out. Okay, first time we've had one till we, yeah, so I want to see it get above there as well. Okay, next chart here is silver against the S&P 500. Again, Great Depression, energy crisis, tech bubble, where we are now. So we are at historic lows as well. Lower than the Great Depression, lower than the energy crisis, on par with the tech bubble top. Top of that, what do you see? Bullish divergence. Okay, coming down and bullish divergence off these lows here as well. So if this starts to come up, all right, break out this falling wedge, then we get above there, all of a sudden we start to move back into an uptrend, things like that as well. So you can see how, you know, Tung's been talking about why gold is historically cheap through his macro perspective. You can see how the charts are telling you the exact same thing. They're down at the levels that they were when it was historically cheap. So this is where the way that I kind of put it is, if you know the macro, you can find where the good surf spots are. But if you know where, if you know TA, you can actually time the beautiful waves once you find the good surf spot. Okay, so for instance, if you're looking at something like here, you may have known that silver was historically cheap in 1961. However, it bounced along here until it broke out here in 1973. So actually, you wanted to go long on silver then and not give up 10 years of money doing nothing. Then you're in the trending stuff. Same thing down here. You would have known that silver still coming down, and when we're starting to roll up a bit, like it's all cheap down here historically. But if you had actually waited for the change of structure and waited till it was making higher high, higher low, higher high, then you can see here 03, 04, we changed our structure. That's when silver went ballistic. You would have missed any other kind of things. So same thing here. Once we start to see it tip up, then we know that we're moving into an uptrend, and that's where you want to be in it. All right, so I hope that video helps, guys. I know a lot of you have been asking around why I all of a sudden started talking about silver a lot back in March. You can now see why, what I was seeing in the charts, not just on the silver chart, but all of the macro charts that are saying the same thing as well. Okay, so it's really important to get confluency, not just within the single chart, but within multiple charts as well. It will eliminate that human error. And that is how I've been able to get the bottom on gold in October 2022, which was this. That was how I was able to get the bottom of uranium, which was the other one that I posted about, doing the exact same thing. Okay, when you look at these key charts, you can start to see where the themes are, where the money's going into, and you can actually start to see that. Another thing, like everyone's really bullish on Bitcoin. Let's look at silver against Bitcoin. So silver against Bitcoin, that's the 3 monthly. Let's go down to the weekly. Just going to get rid of the RSI because it doesn't really work there. Okay, but looking at it here, at the moment we've broken below this major support here. Okay, support. So this was the 69K top, this was the 64K top, and this is now. So silver was historically cheap compared to Bitcoin here, and now we've broken below and come back up. All right, looking at the daily, at the moment it's in an uptrend. Higher high, higher low, higher high, higher low, higher high, higher low, equal high, higher low, equal high. So at the moment, so till this starts toppling over, silver is outperforming Bitcoin again from March, the bottom. So it's still early days. I need to see this keep going. I really want to make sure it holds above here. But little things like that can help you decide whether or not, you want to invest in something over something else. This is really early days. I need to see this come up, buy and come up, and some of that, and the trend actually change. Because at the moment, lower low, lower high, lower low, lower high, lower low. This could just be a lower high and keep coming. Okay, I need to see the buyers step in higher, and then reverse. The only thing is I am seeing lots of bullish signals down here. So if you I'll bring in the MACD because the RSI is not working. but you can see that we're starting to get bullish divergence from, okay, from there to there to there, there to there to there. And also right now, the MACD has crossed bullish. So if that starts crossing back and things like that, then yeah, I'll start to look for Bitcoin to possibly outperform again. But until then, you understand why I jumped on silver, why I was looking at it, why I was putting all my effort into silver since March, because macro bullish and TA bullish as well. Hope that helps, guys. Take care, and let me know what you'd like me to do a video on in the description below. I'll put the description to the videos on gold, uranium, etc. in there, so you can go back and watch them and get a feel for how I can look at the market in that way as well. Hope you liked the video. Like and subscribe, and I'll catch you on the next one.